Welcome back to another Business Broker 101. Today, I'm going to talk about a BOV. Well, what's a BOV? Broker Opinion of Value. And in its simplest terms, it's a pricing guideline that a broker uses to establish the price or the value of the business for either a seller or a buyer. All right? So, as part of the BOV study, a broker will look at a category, a business category, a restaurant, an automotive dealership, a landscaping company. Study the category and start comparing the business that he's valuing against other businesses in that category. And he'll look at all the financial ratios and he'll look at the profit margins and try to determine whether the business he's valuing is above average, average, or below average. Now, there's no such thing as an average business, but there are qualitative adjustments that you can make to a business to place it within a category of businesses, all right? And that's what a broker will do to start to formulate. You'll look at that category. You'll look at other pricing guidelines. He'll look at a number of different resources to try to get smart about where this business would fit in a category. I talked about cash flow. I talked about net income and the recasted items that we add to net income to get a cash flow or a seller discretionary earnings, SDE, multiple, all right? So a broker will look at, when he has the SDE, he will look at a number of different multiple or pricing methodologies. The first would be the market-based analysis. And this is looking at past sales of businesses in this category, hopefully in the same geography, and establish a price multiple based on history, based on other businesses in the category, and whether this business is better or worse than those other businesses. The second methodology is called the SDE multiple, and this is where a broker will make a qualitative assessment on answering different questions, such as historical profits, income risk, deal financing. Is the seller offering deal financing? Make it easier to buy. The business type, business growth, location, facilities, desirability, marketability, competition, and industry trend. Again, they'll rank from good to bad those different answers to those questions, and then they'll establish a size premium for the category and come up with a multiple based on the answers to those questions. Each some favorable, some unfavorable, depending on how the question's answered. So SDE multiple is another methodology. The one that I think is interesting is the buyer's test. And this is, what is the price of the business after it covers a reasonable owner's salary, a return on investment for the owner, the servicing of the debt to purchase the business, so the interest expense and interest cost of the business, and the annual price that it would be to capitalize the business, to acquire capital equipment, okay, to run the business. So if it covers those four things, and you add it up, then you say the business meets the buyer's test. So return on investment, owner's salary, debt service, and capital acquisition, okay? So once the broker has a number of different methodologies, he weights those methodologies and then comes up with a pricing guideline for the business. Now, I use the word pricing guideline. It is not a certified business appraiser. Those are done by individuals who have gotten the credentials to establish a business value, okay, an appraised value. The pricing guideline is used between the broker and a buyer or seller for pricing the business. It is not a certified business appraisal, okay? We have those, we offer those, I can get those for you, but it's different than a BOV. All right, so I hope that puts some light on broker opinion of value and its uses and what goes into it. And if there's other questions, you can call me always, 248-885-7804. All right? Have a great day. Thanks for joining, and I hope you know a little bit more about BOV. Take care.